Daily market analysis for April 19, 2017. Let's start by looking at the market breadth. And if you look at the market breadth, what you'll see today is that 107 stocks were down 4% and 74 were up 4%. What it tells you is that there's more selling than buying in the market. And as you see, the trend in the last 5 days, there are more sellers than buyers because you see the 115, 101, and the up day was marginal up day, like the only 71 stocks up. So there has been a steady selling which has been happening since this 492 day. There was a bounce attempt after that, like again they were selling 2 3 days of buying, again selling, 1 day of buying, again selling. And if you see the breadth, market breadth as such, you will see that it peaked in terms of the number of stocks which are up 25% in a quarter. If you see that, you will see that it peaked at around 1400, somewhere around say here 1463 I think, uh, in December, on December 12th. And since then, now from that high of 1400 or 1500, I think 1582 here, so from that high on this particular date, if you look at today, there are only 480 stocks up 24% in a quarter. So and you will see the number of stocks down 25% in a quarter has increased to 431, which is not a high number. So what's basically happened is a lot of stocks are correcting or they are pulling back. And this is also, if you will see that this is 25% in a quarter, just 25% in a 65 days, because a quarter is 65 days. So this is 34 days, which is half of that, almost half of that, 13% in 34 days. And you'll see that there are more stocks which are down. And this is the reason why you will see that stocks are not having a follow through. If there is a breakout, they're not necessarily following through, and a lot of stocks are continuing to break down from consolidation, or after making new highs they're breaking down. So let's look at the indexes. And if you look at the indexes, if you see like around December is when that thing picked, and since then it's been just going sideways. So somewhere around December here, somewhere around I think beginning of the first 2 weeks of December is when the breadth picked, and since then the market has just been going sideways. And if you see the action here, 2 3 days of buying, 2 days of selling, 2 3 days of buying, selling, 2 3 days buying, selling. And we had action like this last year also. For a long period of time it just went on sideways, and then finally it broke down. Here also, like, and it kept on going down sideways for a long period of time. So the rally which started post election has run into, basically this was the bounce, which was just 10 or 15 days, 1 2 3 4 5 6 7 8 9 10 11 12, say probably 1 month. After that it's been just going sideways, losing momentum. Every day it is losing momentum. T2107, which tells you how many stocks are above 200-day moving average, still 60% of the stocks are above their moving average. T2108, 47% of the stocks are below their 40-day, or only 47% of the stocks are above their 40-day moving average. So 53% of the stocks are below 40-day moving average. So same thing which you'll see in S&P. It had like the small cap index is what we are looking at here, which had the biggest trouble. Basically that is why you'll see bread deteriorating, while the indexes like S&P, they are like capitalization weighted, so few stocks can just still keep them up, and they are just going sideways. And that's true of like almost all the indexes now. The total market index also, you'll see that after this peak in March it is just going sideways. So the background is really that the breadth is deteriorating, which in practical terms, if you look at buying breakouts or looking at momentum stocks, you will see that they are struggling. Many of them are reverting, and if there is a breakout intraday itself, that breakout can fade. You'll see so many examples of that. Like say here is an example of a stock which was up like probably at some stage more than $10 or $12, and it faded. Or even I think oh, here the stock was up, and you can see hundreds of like, and if so many stocks like this where there's a breakout and it fades, or like say yesterday you had this stock which like and had a breakout, and if you bought, it just faded. Like in the first half an hour it was up, today also it was up, and like then it faded. So that's basically what is happening to many of the breakouts. So the period is not very suitable for aggressively trading breakouts, because breakouts are not having follow through, and the short side is also not aggressively having follow through. Why? Because the stock market itself is going sideways, so that's basically stuck in a range. So unless you have like some reason to believe that you should be loading up, you should not be loading up. The idea is to like keep your gains, which you whatever gains you made, and then build on it, and not really play in unfavorable circumstances. So that's the thing. So basically, on a day-to-day basis, what do? You run 4% breakout scan, you run 4% bearish scan, you run dollar breakout, and I've gone through all those. And here are some of the candidates. As I said, like look at it, because the market is not favorable, I'm not recommending actively going out and buying too many stuff. Small trades might be more. This is not going to be like, unless the market resolves with either a sell off or a breakout, it is going to be a bit of a struggle for some time till it resolves. But here is like in a setup where you had a stock which is going sideways for some time and had a breakout, and stock did close near the high, not exactly at the high, but did close near the high, didn't fade, the volume was high. So that's like one of the dollar breakout. You have Radiant Logistics again, like say this is stock has an established momentum. Okay, orderly pullback of 1 2 3 4 5 6 days. This is a narrow range day. The stock was up only 0.36% or 2 cents before the breakout, and I would have liked it to close near high, but like it's not really faded as much as other stocks have. So that's really the one of the better setups here. Some of these kind of setups in a good market, I would be all over them. Like I would be buying very aggressively, but in this market, you have to be. There are too many stocks breakouts which are failing basically. PRJX again, like say sideways move from which it is breaking out. Stock did close near the high. It's like one of those stair steps kind of movers here. Like last time when it had a breakout like this, you'll see that it made a 10% move here. It did make a 12% move, so this breakout didn't really follow through. So if this breakout follows through, then you can have and if you look at the volume, it's only 100,000 shares traded, so it's a thinly traded stock. So that's one thing which you have to keep in mind. I wouldn't recommend buying stocks like this in this kind of a market environment currently. On the short side, you had the gold stock selling off. This is low price stocks which is breaking down, probably drill quip, which is again like many of these oil and gas stocks were breaking down. EMES, which is one of the better, like one of the biggest winners here during this 2016, I think one of the second or third biggest winner, and it went down. And which also brings me to the point, which is like a lot of people will tell you can buy stocks which has good earnings. Okay, okay, listen to people, but don't make your judgment based on what people say. Okay, because that's something which you have to check it out by yourself to look whether that is true. Do the stocks which make the biggest move, are they the one with earnings? And I can show you the earnings for stocks which have made the biggest move in the last 1 year, and you will be surprised, which should not be a surprise to many of the people who've been around here for a long time, that that is like another I'm going into the site which is like the IBD site to show you some earnings. Okay, and what you'll see is that okay, unfortunately it doesn't allow you to basically resize the window, but that's not a problem. Let's look at like that EMES, which is basically what we are looking at it. Okay, which is one of the biggest winners. What do you see here? Okay, this is the earnings and this is the sales. The stock has been making losses. It's like been making losses. Okay, its sales has gone down, like the stock has been making losses entire 2016. Okay, big losses, $4.55, and that stock is one of the biggest movers uh, in the market. If you look at it, like say if you go to, like, this is the liquidity universe, which is basically the stocks which are US common stocks and ADRs, and liquidity is true. Liquidity true is basically the volume last 3 days is 100,000, and price is about 2, which you can make 3, whatever you want to make. And let's say like you want to see stocks which are the biggest movers, uh, we can look at by YTD. Okay, obviously this was like, and if a stock was up a lot and if it has corrected, it will not show, but like say you will see that EMS is now 1251, but like, and if you had seen uh, on a longer term, like, and I say DT, okay, you'll see that EMS was one of the better performing stock, or it was one of the stocks which did, like, it is the 25th ranked in terms of it was up 434% from its 52-week low. Okay, and if you look at any of these stocks, okay, most of them you will find that they have like a poor earnings. Okay, so why do people keep telling you to buy stocks with good earnings? Okay, because it gives them a feeling that they are doing the right thing, not based on data. Stock has been making losses. So this stock has been making losses. This is a sales which has marginally improved, uh, but basically stock has been making losses, huge losses. So why is the stock one of the best performing stocks? Here it went up. Okay, and these are the questions which you need to think about before you take advice from anybody about buying certain kind of stocks. That make your own judgment. Okay, don't listen just because I tell you, look, and don't listen to me or to anyone, no matter what they're telling you. Okay, look at it like in a tail, which is like the third best performing stock, and what do you see? It's earnings. See, it doesn't have sales, zero sales. It has negative earnings. Okay, it has a IBD EPS rating of 41. That REN had a IBD rating of 58. Okay, and it's one of the best performing stock. So use your brains. Okay, uh, don't listen blindly. Basically, you can do this yourself and look at companies after companies after companies, and you will see that the stocks which make the biggest move, they don't necessarily have the best fundamentals. Okay, and I don't have to be convinced about it. I can show you hundreds of stocks like that. EPS rating is 11. Okay, stock is making losses, and it's one of the sixth largest winner in this year. So if you just focus on stocks with earnings and good fundamentals, you will be missing some of the best moves in the market. And there is a reason why the market behaves that way, and that is what you have to figure out if you want to be a professional trader and not really just somebody who listens to anybody and anything. Okay, stocks make a move for a variety of reason, and you have to basically figure out, look at what kind of stock you want to trade. Do you want to be in stocks which are never going to make a move when the market is making big move, or you want to be in stocks which are really making big moves when the market is making big moves? That's the question which you need to ask in terms of figuring out what really you should be focusing on in terms of the criteria. Should you be buying stocks with the best fundamentals or with the best momentum? Because if the stocks with the best fundamentals are not really participating in rallies after rallies, and the stocks which are the worst fundamentals but best momentum, they are making big moves after big moves, then obviously you can decide to sit out or sit in stocks which are like basically uh, have good characteristics or fundamentals, or IBD says they are good but they are not making big moves, versus stocks which are making big moves. So something to think about. There is like, and that's why what you can do is, if you want to improve your understanding about what stocks make big moves, don't listen to any books or anything. Just do your own study. Take this thing. This is YTD as of date from January 2nd. How much percentage the stocks have gone up? You have these stocks which is ranked CJ, which is ranked oil and gas equipment stocks. Okay, that's a buyout, so you can forget about this. You have this Palm, which has made a big move. It's a biotechnology stock. Okay, you have Cool, which has made a big move, and then you can figure out whether it is because of its was it like, and did it ever even have earnings, or did it have any growth story to make that kind of a move? Stock is making losses. Sales are like in a zero point 0.2 millions. That's like in a more than what I my like, and that's the spare change which I keep in my bank account kind of a sales the stock has. It is making losses, and the stock has made this huge move. Okay, from 3 to 20. Now PLAC, if you see Pulse Bioscience, okay, again you have to look at like and really study the top 100 or so stocks and then make your decisions. It losses. It doesn't have any sales at all to write home about. That's why it's like non-applicable. It is making losses, and that stock is the fourth largest stock in terms of performance. Or Kala, it's a biotechnology, so most probably it will have no sales, nothing, right? Or STRP, which is a buyout, or like if you see Aphism, again stocks after stocks which made big moves may not have any fundamental story behind them. Okay, so be careful about what to believe in. Basically, your beliefs drive your behavior. So if your beliefs are wrong, um, you will basically be doing wrong things, and you will find that the stocks which are making big moves are not really what you believe should be making big moves. Stock after stock in this category, I can say blindly. Okay, any period in last 10 years, if you take and look at stocks which made the biggest moves, most of them will be the biotechnology stocks most of the time, and they will have no earnings, or they will have nothing basically, or like in stocks which have some of the worst earnings will be the one which will make the biggest moves. So think about this, not only just because like to think in the sense of the world, but think about it very seriously as to why that kind of a thing happened, and also like, and if you want to really make money, then why you should select stocks based on momentum and not necessarily based on other factors. There can be stocks like this which has good earnings, and it made a move, but then the next question which you need to ask is, where should we be buying it? Should we be buying it at a proper buy point, or at any random point? Those are some of the things which one needs to answer before buying anything. And especially the thing which I hear a lot, you look at stocks which hold up the best, they will outperform, or stocks which are the best fundamentals, they will outperform. In the short run, if you're looking at a time periods of 3 to 6 months kind of a thing, I don't see any proof of that in the last since 2009 bottom. In fact, on the stocks which make the biggest move after a market takes off are the stocks which are the most beaten down stocks. Like if you see this particular thing, which is basically you're looking at YTD kind of a thing, and this can be a bit misleading because some of the stocks which made big move in the last 1 month have corrected. But even if you look at some of these stocks, okay, they were stocks which they were going down and they are making big moves. These are not stocks which had relative strength. They were stocks which are going down and they made big move. This is stock which is one of those rare stock was going down before it made a big move. Okay, stocks after stocks you will find which were like basically underperforming the market will make big moves. Stock is down big, is now up. Okay, SPR, see, stock was like in a downtrend, multi-year downtrend, and then it made a big move. And even like say, you can look at this this stock was down. Okay, it didn't have relative strength. There was a breakout, and after that it attained momentum, and then it went up. It was not one of the stocks which was outperforming the market, or which has a relative strength when the market took off. And this is very important that you study this yourself and make your own studies and judgment, because if the fundamental principle or fundamental hypothesis based on which you are going to do your trading or select stocks or select buy points is wrong, then nothing is going to help you. And if you base your understanding of the market and your trading on a right kind of an approach, then you increase probability substantially, and then every element which you'll add to it will substantially increase your probability. So study, don't take it for granted just because anybody says or a market wizard says or somebody says. Just do your own studies, and do your own studies for a market relevant time, like you can study last 10 years um, as against last 25 years or 30 years, which where things might have been different, because what is working today is what you are interested in. You're not interested in something which worked 10 years ago or 20 years ago, or people made millions in the dot-com bubbles, or like in the 3 or 4 years before dot-com bubbles. Are they today making money? That is the kind of question which you need to think about. And most importantly, you look at what kind of setup and what kind of stocks you want to focus on. That's very critical if you are looking at making money. And for that, the answer which you need to have is, look, what is the basic way in which I should be selecting stocks. Basically, if you're looking at, say, putting together a team of basketball players, what will you be looking at? You're looking at people with the highest height and the best stamina or speed, short-term speed. You're not looking for a person who is going to be winning a marathon. If you're looking for somebody who's going to win a marathon, you're going to look at some of the really skinny guy. Different. You're not necessarily looking at somebody who's got long height or something. So same way, if you're looking at making money, look at the characteristics of stocks which are making the biggest move now, and then look for a stock similar to that, rather than base your views or base your thinking based on something which is not necessarily true, but it feels good. See, it always feels good to say, look, buy stocks with the best fundamentals, don't buy junk. But if you find that there is more money in buying junk, then what you would rather do? Would you rather buy junk, or would you rather buy a good stock and just pray? So that's one of the things. And just to cut short your learning curve, okay, if you don't want to go through that particular process of going through hundreds of stocks and figuring it out, one of the things which you need to understand is the number one criteria for selecting a stock which has worked across markets, across time frame, across anything, is momentum. Okay, there is no other fundamental factor which is till date proven to be better than momentum. The second best factor after momentum is earnings. Okay, but still momentum beats earnings as a factor. So to give you a simple this thing, which is like one of the experiment which I did, or I said in the boot camp, give me $5 and I'll tell you $1,000,000 secret. And that $1,000,000 secret is that choose stocks with momentum. That's as simple as that. That's you don't need to know anything about a stock as long as it has momentum, because you'll see that the stocks with momentum make bigger moves than stocks which might have good fundamentals, which might have IBD rating of 99, and they may not participate in the rally at all, while a stock which has an IBD rating of 1 might be up 1000%. So think about it. Select your stocks based on the right criteria, not based on what you feel or what you hear or what you read in book. Base it based on actual thing. That's why I always recommend that daily do the exercise of finding out which stocks are making big moves every day. Sort this by YTD. Look at which stocks are going up. Do some research a little bit to just convince yourself. Look what should I be looking at, and should I be buying stocks with earnings or momentum? Which one is more important? My answer is very clear. The answer is momentum, based on doing this for 17-18 years. But again, you have to convince yourself, because if your beliefs are different, you're going to be doing something totally different. If your beliefs are you believe in Jesus, then you go to the church, pray, wear a suit on Sunday and go. if your beliefs are different, that you don't believe in God, you're not going to do that behavior. So belief drives behavior, and if you want to change your behavior, or if you want to change your trading performance or stock performance or performance of what you're doing, then change your beliefs to the right kind of beliefs, and then things will start happening.